Already in 2026, very big things are happening, sending seismic waves through the international community. In addition, there are a list of key economic demands the US government is making of Venezuela. I'm going to tell you how Venezuela fits into the United States' hard fight against de-dollarization and inflation, and the moves that you need to make to protect your portfolio. First, I want to note a big important fact about Venezuela. It has the largest proven oil reserves in the world. And by that, I mean around 300 billion barrels. This is literally almost 20% of the world's proven oil reserves. And it's not just that. On a per capita basis, if you're looking at population, Venezuela is a very wealthy country. So we see the value of those resources from a market standpoint. The first part of the deal is that US oil companies will be brought into Venezuela. And these are companies like Chevron, ExxonMobil, and ConocoPhillips, particularly US companies that deal with exploration and production. They're going to be brought into Venezuela to repair Venezuela's old oil infrastructure and boost production. While Venezuela is number one in oil reserves, holding 19%, it's only around 21st place in terms of production per day, or around just 1% of the world production per day. If you just compare this to countries like Saudi Arabia, who has 17% of the world's oil reserves, but has 11% share of production, you'll see how extremely underutilized Venezuela's resources are when looking at its actual production potential. Also, while Venezuela has more reserves than the US still produces 20x more, even though the US has much less proven oil reserves. So with US oil companies coming in and fixing Venezuela's production facilities, US is now planning to boost Venezuela's production from around 1 million barrels per day to 2 to 3 million barrels per day. So if US companies boost the production for Venezuela, how does this exactly benefit Venezuela? Well, the US government has made comments that Venezuela would benefit from oil royalties. But what are oil royalties? Oil royalties happen at the point of production. Specifically, when the crude oil comes out of the ground, Venezuela receives a percentage share of the value of that oil. So for example, let's say Venezuela is producing 1 million barrels per day and it's through a US company, and Venezuela's oil royalty rate is 15%. Out of 1 million, if it's 15% oil royalty rate, Venezuela would get paid the market value of 150,000 barrels of oil. As a royalty recipient, Venezuela does not bear any cost to get that royalty share. So Venezuela doesn't have to pay any of the costs a company like Chevron would have to pay concerning exploration, drilling, or production. So the question is, for Venezuela, what's going to be that royalty rate? Usually royalty rates have ranged from 12.5% to up to 25%, even up to 30%, but we just don't know what that is going to be yet. Next, the US government has said that Venezuela would give them 30 to 50 million barrels of oil initially, and they plan to sell these at market prices, which at $60 per barrel is around $1.8 billion to $3 billion. The deal also boosts ongoing requirements for Venezuela to send oil to US refineries. And what is refinement? Refinement is a process where that raw crude oil is broken down to products that can be used by consumers and businesses. This includes products like gasoline that you put into your car, diesel fuel for trucks, and kerosene, and many other oil byproducts. The oil from Venezuela will go to the many refineries on the US Gulf Coast, which is beneficial for the United States because these refineries are built to handle Venezuela's heavy crude oil, which is not like the light oil that is produced in the US. Another part of the deal, or money from the oil deal for Venezuela, is that they must use those proceeds to purchase US made goods, whether it's agricultural products, medical, etc. I'm going to tell you why all of this matters. This plays largely into the United States' goal to stop de-dollarization and inflation. So what is de-dollarization? is the gradual decline of the US dollar globally, whether that is in world trade, financial transactions, or just as a reserve currency at central banks and more. This is big because the US dollar is strong and stable, not just because the United States has the biggest economy. It's actually because every country around the world is using the USD to conduct a majority or some of their global financial transactions. Example of this US de-dollarization that we have been seeing for decades includes, number one, foreign exchange reserves. These are funds held by a country's central bank or monetary authority. And you can see a slow trend from the mid 60s in the 1990s to below 60% today. You will also notice a rise in the use of other countries' currencies, such as China. Number two, gold reserves. Countries have not just moved their assets into other countries, they've also moved their assets into hard assets like gold, where the percentage of gold being held in central bank reserves has gone from below 10% in 2015 to now almost 25% 10 years later in 2025. This trend is a part of certain countries getting rid of their US assets, whether it's T-bills or T-bonds or T-notes that they hold in their central bank reserves and moving into gold. Another thing that they're also moving into, as we talked about earlier in my last video, is Bitcoin too. So we've seen marketable treasurable securities such as T-bonds or T-notes in pre-2010 go from over 40% being held by foreign investors to today being around 30%. So less debt buyers could eventually hurt the United States' ability to issue debt to spend unless that demand is picked up by other buyers somewhere else. Less debt buyers could eventually impact the United States' ability to issue debt to fund its government priorities and spending. So while there are other figures I could touch on, it's clear that over the previous decades, there's been a steady decline in the use of the US dollar, or de-dollarization, as you can see in this final index here. In addition, there's also been an increase in the money supply. So over 25 years, the amount of US dollars is up over 5x from 4 trillion to over 22 trillion. And the increase in money supply has went into overdrive in 2020 due to the government COVID pandemic spending to keep the economy afloat. Cumulative inflation over the past 10 years is up around 50%, according to the CPI index, and housing is up over 100% in the US over the past 10 years. So why does Venezuela matter? Remember my table showing you about the top countries by oil reserves? Control of Venezuela's oil assets effectively gives the United States control over 22% of the world's oil reserves, while also having over 20% of the world's production capacity. The United States immediately becomes number one in oil reserves and production, giving them immense market power. A secondary point to all of this is that all of the oil will be sold in US dollars. Anyone who wants to buy oil from the US or Venezuela will have to pay in USD, in which case they must go buy USD on the market to buy oil. This helps the US fight against or slow down de-dollarization, as we've seen de-dollarization grow in some of the commodity markets, with countries like Russia, China, India now doing cross-border transactions not touching the US dollar at all. So what's the angle for you? The US is fighting hard to maintain USD dominance globally. First, politically, through acts like the Genius Act, which pushes to maintain USD dominance in crypto via USD stablecoins. And secondly, now through military means, as we've seen with Venezuela. In 2026, US inflation will continue to increase, while US dollar dominance will continue to slowly decline abroad as companies move from the US dollar to alternatives like gold or Bitcoin, or just conducting transactions in different currencies. To protect your portfolio, you need to look at holding assets like Bitcoin that are a good hedge to inflation, or holding investments that give you price exposure to hard assets like gold. And that's what's the angle of why Venezuela is important to the United States economically. Until next time.